Welcome back, guys. This is Building a Million, one day at a time. So I wanted to just get out the expectation for our CPI, our Consumer Price Index for tomorrow. That's where the Feds look at inflation rate to see where the interest rates need to be. We've been at super high inflation over the last year. The expectations for tomorrow is 0.2, which gives us just around a 3% inflation rate year over year. However, that would bring us down to about a 7.3% inflation rate for the year over year, but anticipation of if it can stay below that 0.3%, we're under that 3% inflation rate. So if we do hit the mark at 0.2 month over month from last month, or from the previous month to last month, then what do we anticipate for December? Well, I think we'll see our Santa Claus rally in the stock market. We've had really low numbers in the stock market all over the place. Last month we had a very good drop there down to sustainable numbers. So the Fed's Jerome Powell came out and said, okay, if we see better numbers this month, we don't need to keep raising inflation or raising the interest levels. So right now we're at about 4% Fed interest rate. That's the money that's lent from the Feds to the banks, and then the banks lend it out to us. And so we're seeing 7% and higher interest rates at the bank for 30-year mortgages, which is just crazy compared to the last 10 years. So what do we anticipate if it comes in higher than that? Well, if it does come higher than the 0.2, then we're going to see Jerome Powell come back out being more hawkish, and he's going to have to raise interest rates higher than that 0.5%. And we're going to get higher interest rates. We're going to see the stock market drop. We're going to see a lot of different things happen due to the fact that our inflation rate is still not under control. And they've already raised it so high to try to get it back into control. If they raise it much higher, we could see that wage price spiral. We could see a lot of different things where we fall into a depression versus the recession that we're currently in. And so cross your fingers. We can only hope that tomorrow at 6:30 when the CPI data comes in, that we hit the mark. Normally we do hit pretty close, but if we're too high, we're going to have a hard December. If we can get within that 0.2 and be at a 7.3 inflation year over year, we will see the federal government loosen up, become a little bit more dovish, know that what they've done so far is working, and we won't see such a steep incline in that interest rate so that we can continue to run and do business the way we need to do. So that's what we're looking for. Tomorrow it'll be coming out at 6:30, so you can get online, pull that up. I will try to, if I have time, I'll do a video on it, and we can see where it's at. But look forward to that tomorrow at 6:30. You'll see it in the stock market. If it's below or meets expectation at the 0.2, we'll see the stock market rally because of it. If it's above that, we'll see declines in the stock market more than we already have. This is Building a Million, one day at a time. We'll catch you next time.